Cooler inflation data has fueled a market surge over the past few weeks, with investors hopeful that the central banks are done raising rates and may begin cutting by mid-2024. The S&P 500 has risen almost 8% so far this month, and folks are looking to cash in. Since October 9th, investors have poured nearly $40 billion into stock funds, the biggest two-week inflow that we've seen since 2022. This is according to latest data out from Bank of America, and specifically looking at where some of this money is flowing into. Technology, we know, has been by far the leader of the market, really the reason that the S&P is up just about 19% heading into the final 5 weeks of the year, and tech recording its biggest inflow over the past 12 weeks. So, Brad, investors still finding reason to buy some of these names that have been leading the market here throughout the year. Yes, we did see some pressure going back to August and September, but we have seen a bit of a resurgence. And taking a look at a lot of these 2024 outlook calls that we've gotten from strategists over the last several weeks, many of them who do see upside potential in the S&P many of them do see technology driving that momentum.
Yeah, I think back to our conversation with Wei Li from BlackRock earlier this week, and it said that there's still potentially more upside to think about when you have to consider the Magnificent Seven. And I believe what specifically she had talked to about us in those Magnificent Seven: Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla. But what she had said was that they're currently still overweight. The theme, the Magnificent Seven, played a big part of that. Also saying that it's very different from the dot-com bubble. And if you look ahead to 2024, actually earnings expectations of tech driving 50% and more of those high single-digit earnings expectations. So all that considered really dovetails back to what you were saying about tech a moment ago. And even as we've seen where investors are putting their money into stock funds, about $60.5 billion, according to the BofA research note that they had put out, went into those stock funds. And I think technology still, from what we've heard from multiple firms now and trading houses, it continues to be a tech lean, especially given a lot of the demand that has been that has come to light around not just generative AI, but where a lot of these companies still sit on massive cash piles to deploy both acquisitions strategically or be able to grow out some of these solutions in-house and be able to take them directly to a client base for some of their most high-margin businesses that they operate.
Yeah, certainly. And taking a look at these flows, we do see a lot of optimism heading into the final month of the year and then looking ahead to 2024. Yeah. But so much of this really hinges on what we're going to hear and what we're going to see the Fed do in the new year in terms of how long this higher for longer rates strategy is going to be at play. And then, of course, the pressure that could potentially put on some of these equities here going forward.